You all are live. Have a good meeting.
Okay, thank you.
Thanks.
Good morning, everybody. I'm the chair of the Affordable Housing Advisory Committee. I'm Barry Bialik, and I would like to welcome you to the January 13th, 2021 Affordable Housing Advisory Committee special meeting. Today we have our committee. I haven't got a full take, but it looks like we have 4 or 5 folks of our committee here. And what we're going to be we had our meeting last week. What we're discussing today is specifically the down payment assistance program. All committee members and staff are participating virtually. We appreciate your patience as we work through committee meetings a bit differently. We're streaming live on our virtual engagement hub, which is accessible through the virtual engagement hub link on the front page of the city website and also linked on the committee page. We also have an option for the public to listen live by phone. For those of you out there with us today, welcome. What we do is we have to go through a roll call of members. So I'll now go through and introduce all the committee members who are participating virtually. Members, please make sure to mute your microphone if you're not speaking. And when you have a question or would like to speak, you can unmute your microphone. If you raise your hand, I think I can see your faces. Please remember to mute your phone after you are done speaking. Committee members, as I call your name, please say a quick hello. Let's see, Scott Adams.
Morning, Scott Adams. I'm an urban planner with the Land of Sky Regional Council.
Margie.
Hi, I'm Margie Bukowski with Weaver Cook Construction Company.
Brian.
Good morning, I'm Brian Metzman.
And Paul Heathman.
Hi, I'm Paul Heathman, mortgage loan originator, AVP at Home Trust Bank.
Okay.
Excuse me, sorry, this is Christina. We are having a connection issue on our end to YouTube. So if you could just pause the meeting for a second so we can try and get this up and running. I do apologize. I just noticed it.
Okay, sure.
Barry, just a heads up, this happened at the consortium meeting on Monday as well. It seems to always be an issue out of the gate, but it resolves itself pretty quickly, just FYI to everybody.
Okay, thanks. I think I hit, that's all the committee members that are here, right? It was the 1, 2, 3, 5 of us.
What's our quorum requirement?
I believe we need 6, if I'm not mistaken. I believe it's over half, right, Barry? Christina will know for sure.
Yes, that's correct, Paul.
Hey, Christina, I think I see the problem. It's going to design review committee instead of the AHAC meeting on YouTube for some reason. Let me stand by, guys.
Thank you.
I assume we're live. So just anyone, I see a few people joining us. Just for anyone who's joining us and wondering why we're sitting here in silence, we're waiting for the city's having some technical issues with the YouTube channel. So they're working on getting that live. So we've been asked to pause the meeting for a moment. That's why we're all just sitting here.
We're having a moment of silence
Yes.
for YouTube.
Thank you, YouTube.
Here, I'll do a Brian pin.
Thanks, Scott.
For those of you who are not downtown, it's very chilly. We have frozen fog. And there were some slick spots on the road this morning.
Nice.
So,
It's snowing in Montford.
yeah, it snowed at my house in Oakley too. So, but as I got downtown, it was just the fog.
I thought about that this morning, and I was needing to look up the difference between freezing fog, which I saw an advisory for, and rime ice. Typically happens over the mountaintops.
And what was the second thing you said?
Rime ice,
That's a new one for me.
RIME. It's the typical term, especially throughout the Appalachians, when you look up on a mountaintop and you see all the trees glazed over.
No kidding. I did not know that. I'm gonna look that up. That's cool. Thanks.
Yeah. It may just be a fancy or a colloquial term for freezing fog.
Yeah, I love that. Those little colloquial words are fun.
Yeah.
I'm going to pop off for a quick sec. My dog's barking, so I'll be back.
And guys, I'm working with IT now, so we should be going in 5 minutes. Sorry about this.
No worries.
I just want to mention it's not Christina's fault. It's something's going on with YouTube, so that's what
Oh, that's fine.
Mhm. Christina knows what she's doing.
Computers are great until they're not.
Like, why is it not showing up? I was like, this totally happened last time, and I don't know why. So
Not
thank you, Ashley.
until it isn't.
Okay, cool beans. Well, thanks, Ashley. And cool.
Sorry, I didn't hear
I heard
hear
that.
what you said. What did Ashley say? Sorry.
Oh, Ashley just mentioned that she is working, or CAPE is working with IT to get this resolved, and that it's just some weird routing thing.
I see.
I don't know if any of you guys are in Asheville. I'm just gonna pop on right now, but I am, and hopefully this works. You want to see? I don't know if that will help, but it's pretty frosty out there, guys.
Oh yeah.
You're live on YouTube. For whatever reason, it's routing to Downtown Commission, but on public input on the Engagement Hub, you're live now. So you can start your meeting and we will get the other links fixed but you're now live. Have a good meeting.
Thank you, Ashley. And
you.
if you wouldn't mind starting from the top with, the introductions and roll call, that would be perfect. Thank
Okay.
you.
Take two. All right. All right. Move my papers out of my way. All right. All right. We're going to restart everybody. Okay. Good morning, everybody. I'm the chair of the Affordable Housing Advisory Committee, Barry Bialik, and I would like to welcome you to the January 13, 2021 Affordable Housing Advisory Committee special meeting. Looks like we've got 4 or 5 of our committee members here, and I'm going to go through all committee members and staff are participating virtually. We appreciate your patience as we work through committee meetings a bit differently. We're streaming live on our virtual engagement hub, which is accessible through the virtual engagement hub link on the front page of the city website and also linked on the committee page. We also have an option for the public to listen live by phone. For those of you out there with us today, welcome. I'll now go through and introduce all the committee members who are participating virtually. Please make sure to mute your microphone if you're not speaking. When you have a question or would like to speak, unmute your microphone. Please remember to mute your phone after you're done speaking. Scott Adams.
Morning, I'm Scott Adams. I'm an urban planner with the Land of Sky Regional Council.
Margie.
Margie Bukowski, business developer, Uyghur Cook.
Brian.
My name is Brian Metzman. Good morning.
Paul.
Hi, Paul Heathman, mortgage loan originator for Home Trust Bank and AVP. Thank you.
Okay. I think that's everyone from the committee that's on right now. So we are, yes, I'm just confirming. Yes, so we are shy of a quorum. We do need 6 people. So we just won't, unless someone else joins us, won't be able to vote on anything. Paul, might be, I don't, obviously I can't text people right now, but Paul, it might be helpful if you have, if you can reach out to any of the members who aren't here to see if they can join us, because I think we would be hoping to vote on something. I know Andy will not be attending. Andy did send in comments and he sent his approval via email, but I don't know if that really counts in today's rules. To help our audience follow along, I'll state each section of the agenda aloud and do a vocal roll call for any vote, which obviously I said we can't do yet. Additionally, I ask that committee members raise their hand to speak and I'll call upon them. So, pull up today, get my agenda in front of us. I don't have, oh, no, here we go. Okay. So today what we're on our agenda, we're speaking specifically about the down payment assistance policy. It's an update about a third-party provider. This policy was something that we designed years ago. It was actually adopted 2 years ago. That's how long things take to move through our city process sometimes. So we want to keep this moving. So, you know what? So the city put this out when this down payment assistance policy was created. Originally, the city was going to administer it themselves. Came up during that process that it should be administered by a third party. That was put out to RFP. My understanding, there was 2 parties that responded to an RFP, and we're here to discuss a little bit about one of them, which was from Mountain Housing. Mountain Housing does administer their own down payment assistance program, and they help administer and are familiar with how the one from NCHFA works. So there is a there's a memorandum that was put to our agenda that describes a little bit about this policy. So the part that we're specifically looking to discuss is that from when the policy was written 2 years ago, obviously times have changed a little bit, and the Mountain Housing made a few recommended changes to the policy that would help it be more in line with others and that would be easier for them to administer. So, Paul, do you want to just give a little brief history about this and about kind of the memo that's been created?
Sure, and I'll get us up to date as kind of Barry mentioned, as of 5 o'clock yesterday. So y'all have this memo in front of you, and I'm happy to answer any of the backstory questions on how we got here today. Always makes for quite a fascinating story, but seems like everything happens for a reason. It's not been an easy path, but I'm happy to answer any questions there. As you all know, we had a chance we put this out for RFP, and the team internally selected we had an internal RFP team that selected a finalist to take forward with down payment assistance. And this happened about mid-May, give or take. Unfortunately, since then, getting that on the radar to get this moved forward with coronavirus, the climate, reparations, police, everything that's happening with the city of Asheville, DPA, while very important to the city, unfortunately hasn't risen to getting back through committee, with the idea of taking this back to HCD for not only approval of the third party, but also the change to the policy as recommended by the third party. As you know, last week's AHAC meeting, down payment assistance, you all had questions, and then I heard what the committee talked about and wanting to have a discussion about down payment assistance. Apologize that we weren't bringing this back to AHAC and going to HCD. It was all in the spirit of trying to move this forward, 2 years later. So that's why, hence today's meeting, to have this discussion. Yesterday, in a conversation with other city staff, there was a disagreement about the recommended change, as you see there, in not making any part of this loan forgivable even after 30 years, which was the request of the third party. So city management had this item removed from HCD for January's 19th meeting next week. So I assume it will come back on February. We'll see. So in a way, we're almost back at square one. So I guess everything happens for a reason. So I'm glad that we will have an opportunity to talk about this morning. City staff has changed their mind on that repayment recommended changes. And so now I'm curious, working with all of you as a pathway forward that you think would be best, as our, the big choices you all make is about policy. And I think that the question on the table today, I think is fair, Barry, is how do we move this forward that can be agreeable to everybody?
Thank you, Mark.
Any questions? And thank you, Barry.
So Paul, can you give us a little bit of background on what's the background of their concerns suddenly, or differences now?
I think that that there is a belief that there should still be forgiveness in down payment assistance and rewarding people for being members of the community by then either offering that discount after 20 years or completely forgiven at 30. If you remember when we first had these conversations back in the day, originally in the discussions, people wanted to grant the funding up to $80,000 was discussed. Then the pendulum switched to, no, we need this to be a revolving fund that keeps living and going beyond the 20 individuals it might help. Then, in the spirit of compromise and with some direction from city management and city staff, we came up with that compromise of forgiveness, slight forgiveness after year 21, and then full forgiveness at year 30. Now, with these proposed changes from the third party, there is disagreement on offering that forgiveness.
And I'll just note that we when this was going through 2 years ago, we were trying to somewhat model it after the existing programs. So NCHFA's program does not have, it's similar to the way the third party is suggesting that it's considered it's a loan, but it's a zero interest, no payment, and it appreciates as the amount. The principal of the loan would increase as the property value appreciates, but it's only due upon sale. So there's never a payment on it, and it's similar to how NCHFA's program is and how the down payment assistance that Mountain Housing uses operates. So I think for kind of making it streamlined and similar to, we're trying to, instead of reinvent the wheel, do something that's already a proven model, and I think that's what. That's where the suggestion of the change came from. Ryan, did you have something you wanted to ask earlier?
My question was just same as along Margie's line, just trying to understand what the debate was internally.
Okay.
I mean, from my own perspective, I prefer the proposal that Mountain Housing has on the table rather than having the loans be forgivable. I don't quite understand the logic behind that.
And Barry, if I may interject quickly, I think that I'd assume anyway, this is kind of a unique situation that AHAC could either maybe suggest that we go back to the drawing board with an RFP, perhaps stating that no changes to the policy can happen, or I think that AHAC could say, this is actually a good proposal. We should talk about this more in February and make a recommendation. I think those are the two pathways that I can see. But again, this is kind of a unique situation.
Yeah. So I guess, again, since this is a policy written 2 years ago, the numbers and everything were based on something 2 years ago. Things have changed obviously a bit. House prices have increased. But one of the things that I think we really have working in, our favor right now is the low interest rates. The low interest rates make such a big difference for qualification. So they really, right now, the interest rates as they are, in the 2.7 to 3%, there's a timeliness to that over the year, there's a chance that could increase. And that gives buying power to folks in the 80% AMI, even 60%. I think we have the closest chance ever of even 60% AMI right now being able to qualify for something with some down payment, with assistance, whether it's just through this or layered with others from NCHFA or Mountain Housing programs. And it's really layering of down payment assistance programs is very common. So there's definitely a timeliness to right now because of interest rates at historic lows, that it should be that everyone should have the opportunity to take advantage of those. And this program kind of really makes that difference of whether they can take advantage of those interest rates now or not. So there's a few, and I think we can discuss this further in the February. There's a few little, besides we have the discussion specifically on us right now about the two recommended changes, and then there's a few of the policy questions that maybe could be brought up. Now that we have a moment, like there's one is specifically at, and maybe Paul, you can help me just understand this, like the date right now that's worded, the down payment assistance program that was adopted is worded that it has to be used by December 31st of this year. Is that something that just can get extended, or is that something that the policy needs to, that would be a time now to make that technical change?
So that may have been the Federal Home Loan Bank piece of it, Barry. The money for the $1 million down payment assistance for the bond funding, strictly under the 80% AMI, we have until November of 2023 to get that out the door. So about 2.5 years. And I think there's even some caveat there with, it can be allocated and you still get the thumbs up that the bond people are happy. So we've got time on the $1 million. That December 31st date at the end of this year may have been the Federal Home Loan Bank. I have to double check that, but we've got time on the bond funding.
I was just reading it. It's $500,000 of the $1 million from the bond fund is set aside for people with less than 60% AMI and must be spent by December 31st. Otherwise, that reservation for the 60% AMI people goes away.
Actually,
yeah, I just read.
And I'm getting a lot of feedback. I don't know if everyone's muted, but so I'll make sure I mute myself when I'm not talking. But Brian, thank you for that. You're right. That set aside for 60% AMI. They wanted to give folks a shot to, because that's a lower AMI, harder to make those numbers work with DPA. So good point. We probably would want to adjust that date. Of course, if it went out, we'd still have this whole year, but we could still extend it. But that's a really good point. Thank you for catching that.
Okay. And if there's any, go ahead, Paul.
If I may, just to speak to what Barry had mentioned about the drop in interest rates and that striking while the iron is hot could be an important thing here. But just, an estimate, a calculation I made, the recent drop in interest rates on a $250,000 house or $250,000 loan would drop the payment as of, what it would have been last year versus this year, something like $250 a month. So it's very impactful. And of course, potentially temporary.
Yeah. I think what I'm going to do, actually, so we put together, I have a little spreadsheet I'm going to share, and I can kind of go through, I'll talk through a couple of scenarios on that just show the effectiveness of this, of the down payment assistance. So I'm going to go ahead and share that spreadsheet now.
And Barry, Paul here, just a quick friendly reminder to everybody that we do have a hard stop at 10 a.m. Because we've got another meeting, but not us, but the Cape folks do. But again, we've got February 5th, I think.
Yep. Okay. I'm going to go ahead and share this spreadsheet now, and I'll talk through it. Okay. Can everybody see that?
Yes, I can see it.
Okay.
Yes.
Okay. So what this is a down payment assistance calculator. So I'm assuming a couple of things right here, and I'm moving a little cursor around here. So the assumptions that I've got are interest rate at 3%. And this is assuming that if a loan does have PMI in it, that a monthly payment would be about $143. Paul Heathman and I went through this yesterday. He did some quick calculations, so we have at least a number to base off of. Here at the bottom, these are the HUD income guidelines. So these are maximum incomes for 80% AMI and maximum incomes for 60% AMI. These are the way they're kind of tiered by the amount of people in a household. So basically, for example, in 60% AMI household with 3 people in it, the maximum income that's considered 60% AMI is $38,700. 3-person household at 80% AMI, it's considered $51,600. So those are just some assumptions I'm going for. And when I do some quick calculations, I'm going to show you this is what it's showing on the scenario that the minimum that the income would have to be to qualify, to make this to make a purchase feasible or not. And again, there's a lot of assumptions going into this, and every individual credit is differently, and that affects something. But we tried to work with some, median, middle range situations. So, what I'm going to do is quickly run. So we'll run through an 80% AMI scenario. The way the down payment assistance program is written, that from 60 to 80% AMI, that the maximum down payment assistance would be $40,000, and then for 80% AMI, it would be under 60%. It's 40,000, and then between 60 and 80%, it's 35,000. So, example, if they're in a $245,000 house, I'm going to change this number to the 35,000 level. So what this shows, the sales price of a house at $245,000, assuming $5,000 in closing costs, $1,000 cash in from the buyer, which is what the down payment assistance would require. Assuming I'm going to actually just take this out just to see how that makes a difference. So this would be if there was other layered in down payment assistance, but this shows, so if a buyer were to have the $35,000 down payment assistance on purchasing a $245,000 house, there would still be AMI in that loan, and that would give them a monthly payment of $1,340, which puts it, the income they would need is $48,000. So that makes it a feasible program for someone in a 3-person household at 80% AMI to purchase a house. So what this calculator basically does is trying to help determine the effectiveness of the program and what other layers are needed in. So in the case of 60%, this is where I think the timeliness is really important to this, because the interest rate helps so much. So if we're going to change this to the 40,000, and I'm going to change this purchase price to 225,000 just to see how this works. I know there aren't many houses like that, but there are some. I know there's a condo project that's been proposed that would have purchase prices below that. There still are, believe it or not, some new construction at that price. So at that point, what we can see for us, so this is what we're going to try to do, is see for a 60% AMI borrower, is there a way that we can make this program work? And so what you see right now at $225,000 purchase price with $40,000, that still triggers the AMI requirement. And that would mean the minimum income would need to be $44,000, which doesn't really trigger the range in the 60% AMI. However, if there's layered in other down payment assistance programs, which is common, especially for 60% AMI buyers. So I'm just going to put in a $20,000 extra down payment assistance to see what difference that makes. And you can see that actually makes it feasible. The biggest thing it does is it removes the PMI requirement, which is private mortgage insurance. And you can see the way my calculator is doing that is it's calculating, it removes it if the loan to value is 80% or less. So in that case, in a $225,000 purchase with the city's $40,000 down payment assistance, and then $20,000 in other layered down payment assistance, such as from North Carolina Housing Finance Agency, it actually shows that we could get to that the minimum income would be just under 36,000, which makes it feasible for 60% AMI. What changes, that's assumptions based on the interest rate. If the interest rate were to change, just to give an example of the timeliness, what that difference makes if we change that interest rate to 4.5%, and you see it changes the number to make it not feasible for that three-person household anymore. So, the main thing I was wanting to illustrate with this is the timeliness and how to make that. In some ways, the lower interest rates are acting as a form of allowing 60% and 80% AMI buyers to be able to purchase a house that, once the interest rates go up or go back to even what they were when this program was originally designed, it wouldn't be feasible anymore. So we have one of the striking while iron hot approach to how the interest rates really work in our favor right now. So I'm really want to try to keep the down payment assistance moving forward. I'd really be disappointed if that did not. So I'm going to stop sharing this. I will post some of these, a copy of this spreadsheet or some of the scenarios worked in. But the main thing I was wanting to show with this is that there is this chance right now that a 60% AMI household could purchase a house. It takes a lot of best case scenarios, but the more we all lean in to help with the city's program, with layering in with others and using the interest rates, it is possible. The one other thing I'll just make a quick note before I stop is, one of the discussions could also come up, since we'll have a moment, is whether we should look at that. Like right now, the policy is $35,000 and $40,000. Should we, to really encourage that 60% AMI, look at increasing that to $50,000 for the 60% AMI? So if we do that, I just want to show you the example without any other layered in financing down payment assistance program. It's at 3% interest rate right now. It makes it feasible. So that's the big thing I was wanting to show, that if we did have the discussion about changing those amounts for 60% AMI to $50,000, how the effect that could have, because the biggest thing it does is it puts the amount over 20%, the down payment assistance slightly over 20%, which kicks out the PMI requirement. And that's the biggest hurdle for qualification at that. It's like a real difference is whether it works or not. And I wanted to illustrate that because that's also a point that was brought up in the Mountain Housing proposal. So that they suggested removing the 20% cap amount on that. Let me go ahead and stop sharing now.
And Barry, if I can just add a quick note, thank you for that. I think I've talked to a few of you that we at the city have developed Appendix 2, which is our home ownership calculator that's pretty detailed, very similar to what Barry put together. We're trying to get that on the website to be a live calculator that anybody can put in some basic numbers and it'll show what the housing payment would be. And then, of course, next to that will be the HUD table to see if it qualifies for under 60, under 80. We just haven't figured that out yet and trying to get that on the radar, but just a heads up, Barry, our calculator's better than yours, but we will work together on that, Barry.
Yeah. And I know one question that'll definitely come up is, obviously I'm using purchase prices of 225 and 245,000, and we talk about all the time this list of only there's right now only 15 houses left in the city under 275,000. But again, where the timeliness of the down payment assistance could be is that there are a couple of projects proposed that are proposing sale prices below 225,000 that have already got housing trust fund funding approval. And I think next month we're going to be discussing the city-owned land parcels that some of them were meant to be for affordable home ownership. So by removing a land basis from a purchase price, it could bring that purchase price down to the levels that of suggesting in the calculator. So kind of the timeliness of getting the down payment assistance, it could layer in with those particular city-owned land parcels, depending on those proposals, or other, projects on city-owned land, or other ones brought by developers that are trying really hard to get houses in that price range.
Barry, just a heads up that Parker has joined the call, so I believe that does give us a quorum.
Okay.
And then I do think listening to you and hearing timeliness, I would imagine if we had to go back for an RFP on this, I'm thinking, with Gallaudet, we have our HUD applications. Nikki and I are presenting to council about the pipeline of partnerships for this year. I would think at the earliest June, maybe at the latest September is my thought at the moment if we had to go back out to RFP.
Yeah. Cool. Paul Heathman, just curious, what are you feeling about interest rates between now and then?
Ooh, that's a tough one.
Yeah.
If I knew that answer, I'd be quite valuable, wouldn't I? I'll say the Federal Reserve, the chair continues to say that they'll keep interest rates low, the federal funds rate low for the foreseeable future. So there's no expectation of a rise like very soon, but really we just have no idea. And if we've learned anything this last year, it's that we have no idea. Let me also mention, as we're talking about these calculators, you mentioned condos, and condos will generally have a homeowners association fee in addition that we maybe should put in the calculator. We wouldn't know what that is until the project is proposed and really until it's finished. Sure. It does generally reduce the hazard insurance liability a little bit, but maybe something to consider adding to the calculator.
Okay, thanks.
Paul H, this is Scott. Is there, for HOA fees, is there a prevailing average or an industry standard average?
It just depends on the
level of service.
What's available in the grounds. And of course, we'd love to see in these projects something, playgrounds and things for children. So, and it would be maintenance for those types of facilities. But, I think of maybe something in the neighborhood of a couple $100 a month as a maximum, but it can be that much. Right. I think if these projects are are being built or planned with affordability in mind, that should be considered as part of the overall affordability.
Sure. I'm just curious if, even if there's a stock average that, for the purposes of building the calculator or just assumptions, call it $150, at least as a holding place.
Yeah.
That's
Maybe the developers could help us at least with an assumption like what they expect based on the kind of the overall plan and shared.
I think a lot of the developers are doing projects like that. They're trying to design them in ways that the HOA fees are absolutely minimum, usually instead of like the condo approach hasn't been used much. Instead, there's more of like a townhome approach, and the townhome approach where people actually own their units, it makes the HOA fees much less. So I think there's an example in a project I'm doing, that there are new construction for $225,000. Our HOA fee is $50 a month. So we tried to design them to be minimum because it is something, as you say, it's important to take into account when you're designing the project of who you're trying to get in there and keep those payments low.
Yeah, that's awesome. Yeah, and for everyone else listening, the difference between a condo and a townhome is simply with a condo you own what we call paint to paint, just the interior of the unit. And with a townhome, you tend to own the land underneath, maybe a little more, but usually the land underneath also is you own instead of being owned by the condo association.
Okay. So do we, go ahead.
I wanted to ask that, obviously one of the things that has to be considered is the fact that we've got to keep this money coming. And if you're 30 years old or 40 years old, and you're going to own this house for 30 years, that's, you're going to be 70 and you never plan to sell it ever, or your kids or whatever. If we don't, what has the city thought about trying to get more and more money into this pool of down payment assistance? Because it could run dry.
So in the conversations, if I'm following you, Margie, if it all went out the door in a year, which I think could be possible, the city could literally do 20 to 30 loans, and then the money is out the door and it's gone until those people sell, regardless if there's a forgiveness or payback. I think MHO's point in their RFP response was, this allows the funding to keep moving. It keeps coming back. It's a living fund. It's working on its own and with its own parameters. They have a very successful down payment assistance program that they do right now, that they've used with home funding, and they've not had to come back for home funding because they're able to recycle, the income back from there. So they haven't had to come back for home funding, which for all of you that know, that's limited. Home dollars are limited every year, so it's kind of nice that they don't have to come back to. Flipping back to your question, Margie, it's very similar. Again, try not to argue both sides, but to be fair here, I think that the point of keeping it a living fund from MHO's point is, number one, they won't have to come back possibly for more bond dollars in the future, or a future bond might not have to include down payment assistance necessarily, because they're keeping it a revolving living fund.
Okay, I agree. I think that's the right thing to do, is to keep it revolving, because the opportunity for the city to go on another big bond is perhaps not something in the near future.
Can we, Parker, you are on the call now, is that right? Is Parker on the call? Is that you, Parker?
Yeah, can you hear me?
Okay, yeah, I just wanted, because you're waiting for roll call, I just want to make sure you're there, because I think we're going to go through and do a quick vote, so I want to make sure you're there because we'll need you.
Yeah, no, sorry, I was having a hard time unmuting. Sorry if you heard me sighing into the phone.
Okay, yeah, okay. So I think what might help is us giving some clear direction on this as a policy. And so what we have in front of us is some suggested changes from from who've responded to the RFP Mountain Housing, and I think what would really help us if we give clear direction as a committee. Do we suggest they move forward and continue negotiations and make sure that this keeps moving through the process so it doesn't get stalled? So I think we have people here. I know we will have the opportunity at the next meeting to discuss further, but just for the timeliness between now and then, I would like to take a vote to, and then we will have the opportunity to discuss it. But I would like to make a motion to approve the recommended changes that Mountain Housing, the vendor for the RFP, for the down payment assistance, has recommended, and that we accept that and strongly suggest that staff continue to move this through the negotiations to get to the point where we could actually see it, that it gets to contract phase.
This is Scott Adams. I'll second that.
Okay. Is there any discussion that we'd like to have before we do a roll call vote on this? Hearing that. So, Paul Heathman?
Yes, I vote yes. Yeah.
Margie?
I vote yes.
Brian?
I vote yes.
Parker?
Yes.
And I vote yes. So it's all ayes. So we're going to make Christine, do you have enough of a motion for that? Christina, just making sure we have enough of a motion. So we have our motion accepted that we recommend strongly that this continue through and that we accept Mountain Housing's recommended changes. Okay.
And Barry, if I can add, I know it can't officially count, but I guess you brought it up earlier in my notes here, but Andy, I think, emailed positivity as well. So I don't know how that counts, but Christine and I can mention that. So I can add this to February's AHAC agenda, and then I guess figure out in a staff report if that's the way that goes, Barry, for HCD in February, that I can add a section about AHAC's recommendation and then any other information that you want to bring forward in February. It sounds like, if I heard you correctly, some additional reasons why now is the time, like the low interest and things. So is that the direction?
Yes. Yeah.
Okay.
And I would like, I think at the next meeting, then I would like to discuss, actually, right now, those numbers, again, were from 2 years ago for 40,000 and 35,000. I would like to suggest that you consider for then that we look at the 60% of my being 50,000 and maybe the 60 to 80% being 40,000.
And Barry, we'll work on that agenda. So I already did the agenda. I always do it while we're in the current meeting for the next month, but I can adjust, obviously. So, I might have to clear some things or push them off till March to give us some more time. You and I will talk about that as the date gets closer.
Okay. All right. Well, thanks. I think this is really important. I think it's really important. We as a committee, help with policy, and this is a policy, and it does get, I have to admit, it gets so frustrating watching things that we've worked on for years and how long it takes to get through. But, I think we as a committee have the voice to keep things moving, despite there might be hesitance from some. We are the people. So we have the right to keep this moving and using our channels and our friends to keep things moving. So I'm pleased you all are helping out with all this. I think, so we've moved. That was really the only item on our agenda. I'm going to move on to the public comment period, the public comment that we have. We have two public comments. The audio recordings, well, I don't know if these are audio recordings, but I have them in front of me. If there were audio recordings, then they would be provided there will be a link to them somewhere. But I'm going to read what we've received for this. They're not related to what are specifically talking about, but we'll go ahead and read them. And I just was told there's no audio recordings, so I'm just going to read the emails that were received. One was from Sharon Trammell, was sent on January 11th. It says Asheville, like other municipalities, should consider changing the code to allow for tiny house construction. Multiple tiny homes could be constructed on small lots and allow for low-income individuals to own a home. From what I've heard, unfortunately, Asheville's building codes do not allow for this kind of construction in the city limits. And that was received from Sharon. I'll just add a little comment on that it's a state building code, and the state building codes have adjusted with, they're working on some provisions for adjusting how that is, but zoning code doesn't really allow things that aren't on attached foundations. But this definitely is a big discussion, and it's something that we will hear more and more of. Thanks, Sharon. The next comment is from Jacqueline Miller. I have a basic question for the committee. I'm a volunteer board member of the Guardian Ad Litem Association of Buncombe County. The priority of our board this year is identifying housing options for those teens who are aging out of foster care and need ongoing support for housing and other services in order to be self-sufficient. What is this committee able to do to address these needs, please? So thank you for that. Haven't, never thought about that. So I read that yesterday, and maybe I definitely thought about that for a bit. So thank you.
This is Scott Adams. I could just quickly chime in on that. I would say certainly, in terms of the city's unified development ordinance, trying to see what the current policy is on single room occupancies, SROs, or boarding houses.
Cool. Thanks. Okay. We've accomplished what we need to for this agenda. So I think what we'll do is we can adjourn the meeting now unless anyone has anything they'd like to add or bring up.
Just a friendly reminder to everybody that if you're not on our community development listserv, please, email Christina. We'll also have a form online, but just to get updates from us about upcoming meetings, our HCD updates, you can get those sent out the day it happens, etc. So please remember just to sign up.
Okay, cool. Thank you. So, so again, just a reminder, this is what we discussed is not on the HCD meeting this month. We will have the opportunity again at our next meeting to discuss this a little bit further, and then it'll be on HCD's next agenda. I'll now adjourn the meeting unless there's any objections. So adjourned. Thank you all.
Thanks, everyone.
Thanks, everybody.
Yep, thanks.